South Korea is down 30% at the time of recording this podcast. In the last month, there have been a lot of convulsions in the global markets, especially to do with the AI theme that's been driving the market over the last several years almost. And whether it's a massive buying opportunity or whether it's a threat.
Now, suddenly, there were 4 releases, in fact, 4 model releases from China just within 4 weeks or 5 weeks. But what has changed is the capabilities of this model. Like Kimi K3 is almost equivalent to the leading frontier models from the US, which is the GPT 5.6 and Opus 4.8. The gap is narrowing, is something that has changed pretty drastically in the last, I would say, 1 month or so. Google is in a really good position, one can say, because they are across all the layers or most of the layers within the AI ecosystem. Apple has been staying out of this capex war. They are not investing at all. Microsoft is in the middle, kind of, because they do have a big application, and Microsoft seems to be falling behind when it comes to integrating the AI models into their own workflow.
Hello and welcome to the Thefynprint. In the last month, there have been a lot of convulsions in the global markets, especially to do with the AI theme that's been driving the market over the last several years almost. And to explain what is happening and whether it's a massive buying opportunity or whether it's a threat, we have with us Sandeep Khomne, who's a tech entrepreneur and a full-time AI investor. Now, in my mind, what has happened roughly has 4 causes.
Okay.
And especially when I think of South Korea, which has been the center of attention, South Korea is down 30% at the time of recording this podcast. 2 of them are to do with macroeconomics and 2 of them are to do with AI technology. So Sandeep, I'll focus on the tech ones with you, but just to tell our viewers what the 2 macro reasons are as well. So one is the high amount of leverage that South Korean investors were taking to invest in the market. That was a classic cycle of greed. People become more greedy as the market goes up, and then when it falls down, the greed turns into panic, and so it just naturally reverses course. It has nothing to do with the technology or even the fundamentals of a lot of these companies. The second macro reason has been US raising interest rates. So when US raises interest rates, other countries are also forced to hike rates to defend their country, to defend their currencies, and companies have a harder time justifying a lot of capex because investors say, well, I can put that money into fixed deposits or treasuries instead. No need to invest in you. So that has a macro sort of effect that brings down stock prices. So those 2 we'll come back to maybe, but the tech conversions are more fundamental, more long lasting. And that's what I want to focus on with Sandeep.
Sure.
So the first big tech convulsion has been, of course, China. So Sandeep, can you tell us the challenge that China now seems to be posing that wasn't so much on the horizon 1 or 2 months ago?
All right. Yes. So China is definitely a big news, a big turning point, inflection point, we can say that. So what had happened, we know with DeepSeek, right, which was early in Jan 2025. So that was one of the first kind of scares in the AI ecosystem that China posed. But after that, things seem to have cooled off, especially given the difference between the frontier models, the closed models from the US and China, the open or open weight models from China. Now, suddenly, there were 4 releases, in fact, 4 model releases from China just within 4 weeks or 5 weeks. And there was one from, I think, Alibaba Coin, and then we had from Moonshot as well. There was this GLM 5.2, and then we recently had Kimi 3. But what has changed is the capabilities of this model. Like Kimi K3 is almost equivalent to the leading frontier models from the US, which is the GPT 5.6 and Fable. Not necessarily Fable, but let's say Opus 4.8. So I think that has something that has changed. They are catching up very fast, and given the backdrop, we still have export controls. There's still export controls on China, and they don't have access to the leading chips. They don't have enough of memory. But what has happened is, in spite of these constraints, they are able to match up in terms of the frontier model capabilities with the US, and it's pretty close. So the gap is narrowing, is something that has changed pretty drastically in the last, I would say, 1 month or so.
So Sandeep, how did they manage to do it? Because as you said, we spoke earlier as well, and Sandeep told me about how it's very difficult, almost impossible for the Chinese to import chips, advanced chips, plug itself into the ecosystem, ASML, TSMC, Samsung. All of these are traditional companies, non-Chinese companies, which comprise the AI ecosystem. But China has just not been allowed to import stuff from there. So how did they do it?
All right. So you're right. So most of the people, when they talk about export controls, they know about, of course, NVIDIA, the NVIDIA chips. But of course, there's this entire ecosystem. Like they don't have access to ASML, the chip manufacturing equipments. They don't have access to TSMC fabricators, neither SK Hynix memory or Micron memory. So it's like across the chain. And in spite of that, of course, they have internal ecosystem as well that is coming up. So Huawei is there when it comes to design, and then there's SMIC. I think when it comes to fabrication of the chips, they have equivalents of ASML as well, but they are still further behind. Like
And of course, CXMT to manufacture.
CXMT recently that everyone heard of when it comes to memory.
Yes.
But there's still lag. Like when it comes to the cutting edge technology that US offers in terms of the manufacturing capabilities, they are still like few generations behind, and not just in the capabilities, but even in the output, like the volumes that they can produce. But they are, of course, doing a great job when it comes to the AI models, the research that is involved in that. Now, of course, a lot of people have been saying, like including Jensen Huang from last few years, that AI, China is number 2 when it comes to AI research. Like 50% of AI researchers in the world are based out of China. So that's one thing. They have a very deep research ecosystem. There's this Tsinghua University, which is very popular in China. There are a lot of startups, AI startups that have come out of this. So the ecosystem is pretty rich when it comes to AI research. They have been doing a lot of innovative work as well, like coming up with new algorithms, new breakthroughs in AI research. And they, of course, have advantage of following US as well when it comes to some research that US has been doing, and it's pretty much open, honestly.
So it's called distillation, right? They took the existing closed models like Claude, and they figured out how to build an open model that comes close.
Right. So that's exactly true. So there's another technique in this training these AI models, which is called distillation, like you said. So you can take a large model, you can query it for a long time, like using millions of API runs and stuff, and then you can train your internal model, and it catches up pretty fast with the frontier model. So China has been doing that, and again, a lot of companies do that. Even within the frontier models, they train the lower models using of course, the more advanced models as well. So that's another advantage. But yeah, it's to do with the entire chain. Like they have a pretty rich AI research ecosystem, as well as distillation definitely helps.
Yeah. Okay. So to sum it up, the West told China that, sorry, you're out in the cold. We'll not export anything to you. You go do what you want. And then China said, "Acha, to hum sab khud hi build karenge." And they kind of built it all themselves. Not as good as the West, but coming close. So let's go a bit deeper into this threat.
Sure.
The signs of it that are most visible are the AI models, so Kimi or DeepSeek. And there, because these are open models, as we discussed earlier, they cannot be easily monetized by the Chinese, right? Because other people will just copy them.
Right.
But they do play spoilsport when it comes to the market that the closed US models have, like a Claude or a Gemini or a ChatGPT. Would you agree with that assessment?
Yes. So the open and it's open weight model. So there's, of course, a little nuance between open weight and open source models as well. So these are open weight, like they release the weights. Of course, companies can download the weight, they can fine tune the weight, and they can infer from it, like use it in their workflows as well. You definitely still need cloud to run this because Kimi K3 is a large model. So it's almost like we said, it's equivalent to the GPT, the latest GPT models of Fable. So it's a large model. It does require a pretty big ecosystem, the server ecosystem to run. But they do pose a challenge because they are, of course, slightly cheap. They are open weight. That's why there's no margins to give to Kimi. If someone wants to run, let's say an enterprise wants to run that model for their own internal use and they have their server ecosystem.
Yeah.
So it does reduce the cost to a large extent. In other cases, it does reduce the cost for normal workflows, right? So there's a lot of workflows that don't really require very high intelligence of the levels of Fable 5 or Mythos or 5.6. So there are tons of these use cases, and that's where you can see even with the stats, a lot of these downloads, it's exploding. The token usage from these open weight models, it's exploding. The overall usage is really going up.
Yeah. So in a sense, they have spoiled the market for the existing US players, namely Gemini, ChatGPT, and Claude. But as you said earlier, the real money comes from enterprises, from companies who want the best models to deploy in their operations. And those guys are not going to switch to the cheap Chinese stuff by and large.
Right. Immediately, like in the current situation or even in the near term, I would say. And like we said, because enterprise require very high security, they need commitments and they need, of course, a big infrastructure as well to run these models, right? And the closed models do give these guarantees when it comes to security and the downtime, because they have to run, of course, 24/7. There can't be any lag. The latency is equally important when it comes to these models. And the guardrails that they put around it, that they won't go rogue and, of course, go inside any systems or hack any systems.
Correct.
Whereas there's no such guarantee when it comes to open weight, right? So no one's giving guarantee. The weights are just available to use. And that's the reason why most of the large enterprises are still with OpenAI and with Anthropic. And ironically, the revenue is pretty high over there, right? So a lot of revenue do come from these enterprises when it comes to the overall AI ecosystem revenue. Like even if the open weight models, they have like some 80% volume in tokens, but the revenue is hardly 5 or 10%, and again the majority is with the frontier US models.
Got it. So Sandeep, we've addressed the models and the competition between US and China. Now let's go one level down and talk about the ecosystem. So Nvidia and its Chinese counterpart, TSMC and its Chinese counterpart. How strong are they?
So they are pretty strong.
And most notably Samsung/SK Hynix and their Chinese counterpart.
Right. So yes, in this chain, the counterparts are, of course, getting stronger and stronger. They are the second largest players, right? Even when it comes to Huawei, which is equivalent of Nvidia, or SMIC, which is equivalent of TSMC, or there's CXMT equivalent of SK Hynix, let's say, in the memory space. And there's lithography as well. So there's a company called Nora, which is equivalent to, let's say, ASML. So they are catching up. They are still a couple of generations behind than these US counterparts.
So what does that mean, Sandeep? Generations behind us, and how long will it take for these companies to become as good as their Western counterparts?
So it varies. Of course, the opinions vary, but it's anywhere between like 1 year to 3 years kind of time frames. So there are two aspects to it. One, it's the capabilities coming closer to them, and then there's a lot of other things like yield, for example, like how much output they can produce. And again, these are pretty complex technologies. That's why yield also matters when it comes to cost. So they are lagging behind in capabilities, and then you also need the volume, right? So for example, it is expected that even with Chinese chips, like let's say in this year or next year, it will be just equivalent to 4% of NVIDIA chip volume. So that's the kind of difference that we have both in capabilities as well as in the volumes. So it's going to take some time, but then the other aspect is by that time these guys go again to the next generation, right? So it's always like a catch-up game.
Got it. So to sum it up, the Chinese are getting better, but the gap is still quite significant. And therefore, when the market prices in monopoly power for all the Western companies for the next 2-3 years, I think that is still robust. That case is still robust.
Right. So if you look at, so it's a good way to look at it from the 5-layer ecosystem that AI is, right? Starting from the applications, models, data centers, chips, and energy. So because everything has to move at the same pace, now China is pretty good when it comes to the application and the models layer. So they are catching up pretty fast in that layer. Chips, they are still lagging behind. Energy, they have always been ahead, so that's not a problem for them. Now data centers, of course, require chips and energy. So data centers, they are still lagging behind. So that's how we can probably sum it up. Yeah.
Okay. So Sandeep, in the last month, the South Korean market is down 30%.
All right.
Of course, it is a very difficult guess to hazard, but does it look a little bit more attractive enough to maybe start nibbling, or you have to wait further?
All right. So like we all know, of course, it's concentrated, right? When we say South Korea market, it's mainly two companies, SK Hynix and Samsung, which has the highest weight in that. And of course, if you just look at the history as well, like in last 1 year, they have run up quite a lot, right? So they have been like 10x now with 50% correction there, like 5x. It's still pretty high. Now, of course, the play was around the memory chips, and memory traditionally is a commodity business and a cyclical business. That's what has been happening with memory for a long time. There are no moats as such. This run-up is mostly with the supply and demand mismatch and with the pricing power that these memory chip companies have. And there are only these 3 or 4 chip companies for that matter. Now, from a technicality perspective, yes, memory chips are extremely important when it comes to the AI build out. And they are becoming more and more important given we need large context and we need more latency and with the agentic workflows. So if the AI adoption and the data center build out keeps expanding exponentially and at the same rate that it's happening right now, there is a chance that the supply demand will remain for a long time, and especially with HBM. HBM is much more complex technology than the standard DRAMs.
HBM is high bandwidth
memory. And so the DRAMs go into HBM, but to make HBMs you need a more specialized technology. DRAMs is extremely commoditized, so it's like a commodity. You can create as many DRAMs as possible, and that's where a lot of this argument is. But they are still trading at an extremely low PE. Now, of course, the argument is their pricing powers will go away, their margins will drop. Like right now, it's 75%, for example, for SK Hynix. So it will keep dropping and it will come to a very nominal levels. But if you have a very long-term vision, like I would say it's definitely still a good play. And there could be, of course, further corrections. No one knows.
In the short term, you can't predict it, but long term, you are, because of high bandwidth memory, you are a bit more optimistic than possibly where the market is right now. Okay. Apart from Korea, has any other part of the AI value chain gotten fairly attractive now post the correction?
So yeah, I would say definitely US as well to a large extent, because there has been a correction. Like probably Nasdaq has come down around 15-20% with probably yesterday's drop as well. And the chips as well. The chips have come off the cliff, like including all the chips, like the GPUs and the entire chain. And of course, then there is networking companies within this. And across I think all the layers, things have cooled off quite a lot, especially the run-up that happened in April, from April till June after the March lows.
Right.
So that is still attractive, I would say. And like again, with the long-term horizon, China is again a pretty good attractive place. Like we discussed, China is catching up pretty fast, and there could be a lot of things that can this AI ecosystem can impact within China as well. Right, within the Chinese companies, within manufacturing, with AI and robotics. So those things are definitely, like China is again, I think a pretty good play.
Chinese tech especially.
Okay. Yes.
So if you can very quickly run our viewers through the existing portfolio, and if you're adding China, what exactly are you adding?
So yes, in the existing portfolio, we do have like tactical position and which has been allocated to China. A small portion of it is China, definitely. That's been the play. Like we know China is going to catch up, and there are some advantages uh, for China. Like we said, even in the tech space, in the AI space, and in the robotics and manufacturing space as well. Uh, so the Chinese tech companies, like for example, the large tech companies, Tencent and Alibaba and Baidu, now these companies have their own frontier AI models, as well as they invest in a lot of these new companies as well. So there's an indirect play as well over there. So those are pretty good. The SMIC is, of course, pretty good when it comes to the Chinese fabrication. Huawei, unfortunately, is private, so you can't invest in that. So there are these Chinese funds, and which are purely focused on tech within China, as well as there are some Hong Kong listed companies too. So I think that's one of the good ways to invest and get exposure to the Chinese AI ecosystem.
Sure. So that's the China question. But if you can just tell our viewers very quickly how the portfolio is structured, they may not have seen our earlier videos on this.
Right.
And then tell us what the return has been, how much this correction has taken away from it, etc.
Okay. Right. So we have an AI portfolio, right, which is across the 5 layers of the AI ecosystem. Like I said earlier, there are 5 layers within AI ecosystem, and we have ETFs that map to each layer. There could be one or more ETF within each layer. And almost 80% is for this core portfolio. Even within that, the tilt is towards the lower layers, which is the chips layer, infrastructure layer, and the energy layer. Now, the reason being simple, because the build out is still happening. The application layer and the model layer is extremely competitive. And some of the companies are, of course, private, so you can't even invest in them.
Okay, so just to take an example, the model layer would be a Gemini or a ChatGPT.
Right.
And applications would be
cybersecurity applications, or the traditional, let's
Sure.
say the CRM applications, or social media application, any application.
Sure.
So the application layer is getting disrupted, of course, because of AI, and the model layer is extremely competitive. There are public players, of course, in this, like Google is a classic example, and even with Amazon and Microsoft, they have stakes in the private companies. So we get exposure to this through the, let's say, triple Q, for example. But for the lower layers, then we have specialized
specific
ETFs.
ETFs, and these are all US ETFs.
These are all US ETFs. Of course, there's some exposure to, let's say, Taiwan and Korea or Japan within these ETFs as well. Because let's say within the data center play or the infrastructure play, there are companies which are global in nature. Even in the energy space, there are a lot of European companies, let's say, to do with transformers or electrification or grids, and so on.
So Sandeep, just to understand the portfolio a bit more, how is it divided? Is there a core and satellite? How are they split?
Yes, so we have a core and a satellite within this portfolio. The core is, of course, towards all the 5 layers, across the 5 layers. Now, even within that, the tilt is towards the last 3 layers, which is the infrastructure layer, energy layer, and the chips layer. And in the tactical layer or the satellite position, we have exposure to China, some exposure to China, then let's say the minerals, and then to copper and photonics and so on.
Okay. And you've launched this portfolio in Feb of this year?
Early Feb, 5th of Feb.
5th of Feb. And the return so far has been?
Yes. So I think with the recent corrections in the last 1 month, the current returns are around 18% in INR terms. And the portfolio had, of course, peaked in the months of June to almost like 35%. So, of course, there's...
So it's halved compared to
almost half
where it
from there.
Was. Yes. So for someone who's trying to get into this theme, looking for a dip, I guess that dip has come.
I would say so, yes. The dip is there. It's a good correction, substantial correction, one would say. And yes, if you have, again, a long-term horizon, and this is a good opportunity, I would consider to really get started.
Okay. So Sandeep, let's take a step back and understand what is happening with AI with some of the big US names, because we keep hearing news about companies like Apple and Microsoft and so on reporting results. Meta recently reported its results, and they've all adopted different strategies.
True.
So let's begin. So we're all familiar with I think companies like Alphabet, which have um participated in the boom. But let's begin there. What is their strategy?
So Alphabet, Google is in a really good position, one can say, because they are across all the layers or most of the layers within the AI ecosystem. They are into applications. They have like 10 or 15 applications with billions of users, right?
So that would include something as simple as Gmail, right?
Gmail or Google Maps and the entire Google suite workflow.
And these are all using AI.
And AI is embedded now within almost all the applications.
Sure.
YouTube is one of their largest applications,
Sure.
by the way. Yeah. So that's the application. They are in the application layer. They are in the chips layer. They have their own TPUs. They manufacture them. They also sell them to other clients. They have their own data centers. So they are in the infrastructure layer as well with Google Cloud. And they are doing huge capex in this space too. They have some, of course, positions in energy and some contributions over there too. So they are present in all the layers.
And of course, you missed out Gemini, the foundational
the model layer,
which they have.
absolutely, yeah. They have the model there with Gemini. True.
Okay. But how big is the capex for them? How existential is the risk that if this doesn't play out, what happens to Google?
So they definitely consider this as an existential risk because AI is a general purpose technology like we know, and it's going to impact all over the place. In fact, Larry Page himself had discussed this internally. He says that I'll rather go bankrupt than lose the AI race. That's why they are all in this.
And that means 400 billion, 300 billion?
So they have, this year's capex is almost 220 billion. It was around 200 or 180 and they have increased it to 220. Last year it was I think somewhere in the range of 100, 140 and before that like 60, 80 billion. Yeah.
And how does this compare to their profits or cash flows, like their strength to keep doing this?
So they do have pretty strong cash flows, and of course they are putting everything into capex from this year, and in this quarter of course it has gone even negative for that matter. So a lot of it is funded through their cash flows, but they are also now doing equity, and they had done an equity deal just a couple of months back, and they are also getting into debt as well. So that's across again, like Amazon, with Amazon, Oracle, Google, everyone is also including debt now.
Sure. So let's turn to Amazon next.
Amazon is, I would say, again in a good position because of the application layer, and the application also being an infrastructure for them, or the physical infrastructure, because they are into, of course, retail. And so retail gets pushed like because of all these advancements in AI and robotics.
So just to give an example, our viewers can relate to Amazon.com. When you shop there, it is using AI to possibly improve the experience, increase sales, things like that.
Yes, so they are using not just in the application layer with the recommendations and across the Amazon app, but also in their infrastructure. So they have like almost 1 million industrial robots in their warehouses and across the supply chain. They also have Trainium chips, the GPU equivalents, ASIC chips. So they have again a good play over there too.
Which they are manufacturing.
Which they are manufacturing by themselves. And of course, AWS is the largest. So AWS, which is into the cloud space data center. So that's a pretty big business. And they are one of the top 3 hyperscalers. Yeah.
Okay. So they have data centers as well.
Yes, they have data centers. Yeah.
Okay. But they don't have a foundational model. So what about that?
They don't have a foundational model, but they are, of course, doing it internally. They will come up with foundational model at some point, or they might just use the open weights and fine tune them. At the same time, they have also, of course, invested in Anthropic too. So they have pretty good substantial, I think, 15-20% stakes in Anthropic as well.
Okay. Now let's turn to Apple, which is an interesting contrarian bet because they have barely participated in the whole AI ecosystem. And as we were discussing earlier, their bet probably is key. The compute cost of these models comes down over time. And so then they can very cheaply integrate AI into their devices.
All right. Yes, so that's their play. So Apple has been staying out of this capex war. They are not investing at all. They are not even investing in their own frontier model for that matter. But yes, their play is going down the line. The compute will drop, the compute requirements will drop rather to run these models. The models will become more efficient. You can even run it on the device within the Apple device as well.
Yeah, so this I want to explain to our viewers because right now when you do a query on any AI model, it has to go into the servers. It can't be, the entire AI cannot be hosted on your laptop or your phone because of the compute that's required.
Right.
But you're saying that in the future, Apple's bet is ki the entire AI can be hosted on just an iPhone.
Right. Or a lot of it for a lot of general use cases, one can say. So even today we have some models you can run on a laptop, for example, but those are very primitive ones. They can be used just for, let's say, question and answer kind of application, Q&A, or just summarizing something, but not the frontier large models. They require cloud, they require GPUs, and even the open weight for that matter that China has. So you'd have to host it on large servers and clouds and GPUs.
Okay.
Yeah.
So that is the sort of positive case for Apple, that compute cost comes down. The negative case is that somebody else just displaces the iPhone.
All right. So that's a risk that's definitely out there in the open. And especially that comes from the Frontier Labs itself, or it can come from any other place. Now, it's not necessary as AI is advancing that the form factor of the next devices or the AI first devices will be same as the smartphones that we currently have. And we have seen this in the past as well, right? When things switched from normal phones to smartphones. So there could be a big threat. You can have certain devices in the future which could be wearables or which you can carry around, which are more AI first, which can gather a lot more context than what a smartphone can do possibly. So there could be a disruption in that space that can come pretty fast, and there could be chances that Apple may not be able to catch up with that. So that's definitely the flip side.
And Apple therefore might meet the fate of Nokia,
Yes, could possibly.
the world's largest listed company, could go into oblivion. So that's Apple's risk and reward. Let's turn to Microsoft now.
Microsoft, I would say, is in the middle kind of, because they do have a big application. They are pretty big in the application space with their entire suite of productivity suites and the operating system as well.
Although it's not been a success, hardly anyone seems to use Copilot.
Right. But because they don't have their own frontier model and they are relying on the OpenAI models, and now, of course, they are pushing hard on the open weight models as well to integrate it. But like we were talking earlier, the application space itself is getting disrupted as well. All right. So a lot of the features, for example, that we have from Cowork, now they can create presentations and Word documents and the final product, not like just the intermediate products, but you can create the final end products directly through these applications. So that's again a big threat to the Microsoft's core business as well. And then there's, of course, competition from the other hyperscalers.
So again, just to put this very simply, what you would have done even a year earlier is that you would have manually sat with PowerPoint and written out each slide and pulled in images and built your presentation that way.
Right.
Whereas now you could just input your requirement into, let's say, Claude Cowork, and it will just give you the presentation. Like you don't have to actually type anything yourself.
Yes, and you can even edit it just by again chatting with the tools, right? So that's, I think, that's how things are getting disrupted as well. And Microsoft seems to be falling behind when it comes to integrating the AI models into their own workflows and own tools. So
for example, a laptop of the future may not even need Microsoft Office.
Could, yeah.
Okay. So that's Microsoft's place, somewhere in the middle, possibly falling behind.
Yes.
They need to bulk up. Okay. How about Meta?
Meta, again, I don't personally follow too much, and they are definitely great with social media. They are the largest player in social media. They can use AI. They are using AI extensively in all their applications. So they are definitely in the application space. They are not still yet at the frontier level when it comes to their own Llama models. They are falling behind on that. They have huge compute for that matter. They can get into the data center space as well. They can rent it out.
Why do you say that they have huge compute?
They already have bought a lot of chips.
Okay.
They have been doing this from long time.
Okay.
And they have been focusing on that, on building their compute around this. So
Which they are now renting out.
they are planning to rent it out pretty soon as well. So they can get into the hyperscaler kind of mode as well. Same as what SpaceX also did with their XAI data centers.
Right.
So
But
yes.
is that a good sign or a bad sign that you have the compute but you're not building your own foundational model, you're not improving Llama, you're just renting out that
So they are doing both, I would say, and because compute is in such a short supply as of now, and it's really a good business model as well, right? Just rather than keeping it lying around, they can just rent it out, and of course, it adds to their revenue as well. Yeah. So that's where Meta is currently. So again, I don't know how it's gonna play out with Meta, but they don't seem to have competition in the social media space as yet. So things could turn out pretty good for them. Yeah.
Right. So that's where you are somewhat confident of Meta.
Yes.
Okay. Apart from these companies, is there anyone in the horizon that you closely track?
So definitely the frontier model companies like the private OpenAI and Anthropic.
Right.
Those are the topmost companies that I closely watch. And again, the next few quarters will be very important because if you have been tracking the last few quarters and seeing the growth of OpenAI and Anthropic, it's like completely crazy. They are closing, and it's expected that Anthropic will probably close this year with $100 billion ARR. So that gets them right into the top tech, right? The big tech layer.
And they're supposed to list soon.
They are probably going to list late this year or early next year. Same with OpenAI. So they are probably in the same space as the big tech.
Okay.
And definitely, of course, one needs to watch very closely.
Of course. Now let's turn to the one company that we began our last podcast with, SpaceX. SpaceX is down, I think $115 from its peak.
Right.
How much was the peak? Do you remember?
I think 220. So they are at around 110. So almost 50%.
50% correction. Now, you were an earlier investor in SpaceX before it listed.
Right.
So I'm assuming you're still in the green.
Yes.
But now is it an attractive opportunity? I read one report which talked, or there was a media article which talked about it's come down to a level where the analyst said that you're getting the AI part of it for free almost, because SpaceX is many things.
Yes.
Please tell us.
Sure. Yes. So like we were discussing last time as well, right? SpaceX is many things. It's a combination of many things. And with the integration of XAI, of course, AI is a big part of it now. And going forward, of course, the orbital data centers can become a big part. So it's the correction. Yeah, of course, definitely it's at a pretty attractive levels, I would say. But at the same time, they have gone up quite a lot as well, right? So just in the last, I think 2 years, ever since I invested, it's almost 3x, 4x just from in the last 2 years. So one has to, of course, keep that in mind as well.
But what do you make of that argument that it's come down to a level where the AI part is almost free because...
Right, because people are banking that the Starlink revenues are going to expand going forward. They are all currently at $18-20 billion. Their SpaceX, the XCI leasing will increase as well, will add to these revenues.
The leasing is the compute or?
The compute, yeah, which they have leased to Anthropic and Google and others. So if you add that and if you add the Starlink growth, so people are thinking that the current multiples or the current the valuation is pretty attractive and takes care of these things of the space launch line of business. Whereas the entire AI, because Grok will keep releasing new models and soon they will start monetizing. They just bought Cursor. That will be adding up more and more revenue.
Tell us more about that.
So Cursor is another company, of course, which is more into the software engineering AI space. And that is again one of the large, pretty big tools that a lot of software developers around the world use, millions of developers use. It competes directly with Cloud Code, and the GPT, of course, chat GPT code as well.
And with GitHub as well?
With GitHub as well, yes, the Microsoft GitHub. So Cursor has a lot of users. And again, what we have seen in the recent past is code is a big thing when it comes to advancing these frontier models. At least from both perspective, in the revenue perspective, because that's where a lot of chunk of revenue is getting generated right now, and even like for the self recursive improvements for these models. So that is again a critical integral part of it.
Okay. So you have been a marginal buyer in SpaceX or not yet?
Yes, I have.
You have been?
Yes.
Okay.
So I think it's a good time, good opportunity to add. And again, one has to have a time horizon of course, 5 years or more for SpaceX for things to play out. And one recent development that again happened, which is worth noting, is they just did the 14th test of Starship, right? Just a couple of weeks back. That was again one of the most successful tests that they have run in the sense that they want to make the complete rocket reusable. Right now, only the booster part is reusable, but the ship, which is the top portion of the rocket, they want to make that reusable as well. And in this test, it was pretty close, and they are pretty confident that they can make that part reusable as well. Which drops the launch cost by like almost 100th time. Yeah.
Okay. So Sandeep, we've looked into the reasons why this correction is happening, essentially the threat posed by China. But just to summarize your opinion, you feel that China's getting better, but there's still quite a big gap between the Western companies plugged into the ecosystem and China. That said, you have taken a tactical exposure to China as well, although the West remains your base. And then we've talked about the portfolio. So since the launch in February, it was up 30% at the peak, 35% in June, and now it's up 18%. So it's actually come down by half, and therefore this could be a good buying opportunity. Of course, someone with a long time horizon who can take on the risk of investing in AI.
Absolutely.
Yes. And then we talked about the different strategies that different US companies have followed, each with their own playbook. So folks, if you have any comments, questions, please put them in the comments. We will definitely answer them. And if you want to contact Sandeep about the portfolio, you can go to thefynprint.com and book a consultation for global investing, and we will facilitate that. These are interesting times. The world as we know it is changing in very, very fast way. Sandeep, any example you can give us of that? Of like the on-ground impact of AI, just as a concluding thought.
Right. So I think I'm completely amazed by the recent developments, especially in this year, after the agentic models came out. Because those are getting pretty stronger day by day, and you can do a lot of useful work using these agents and the models, which was not the case really till even last year. Like you could use the chat GPTs and stuff, but with the agents now you can really do end-to-end work in a lot of cases. I use a lot, of course, in the research and analysis part, and people have been using it in different workflows as well. So I think that's a big change, and you can see it happening quite fast, and the models getting better day by day, week by week for that matter. So I think it's pretty big change, pretty big jump, and the pace and the cadence of launch is gonna go much higher is what I feel in the coming months.
As we discussed earlier, you mentioned that some of the companies are very close to self-recursive improvement.
Yes.
Can you tell us a little bit more about that?
Right. So that is so that's again a big chatter on that. And in fact, yesterday, OpenAI released a statement saying that their recent model, the 5.6, GPT 5.6, they used 5.6 to make some improvements in the production environment that they have. And it did gain more efficiency, like in the range of 20%. So it became more efficient by 20% just using the model to improve itself. So that's like recursive self-improvement. And what's happening is
models are upskilling themselves.
They are upskilling themselves, and it already is doing that to a large extent. Like Anthropic themselves says that 90% of the code for the next model is written by their current model. So this will keep happening pretty fast, and like I said, the the cadence will really improve, and we'll see a lot of launches. We have already seen, right? They keep releasing new models, new versions of the same model like every few weeks now. So things are gonna get pretty crazy, I would say.
Right. Thank you, Sandeep.
Yeah. Thanks, Neil.